The only news of late in retail has been bad news. Target is aggressively discounting merchandise due to the economic slowdown. Meanwhile, retailers such as Bed Bath & Beyond, Gap, and RH have issued earnings warnings for the second quarter. Joining us now to discuss this challenging state of retail is Alex Mill CEO and former Gap and J.Crew CEO Mickey Drexler. Mickey, always great to get some time with you. The headlines haven't been good in retail. You're still running a retailer right now. How are trends looking in your business?
Well, it's hard. Our business is quite small, growing rapidly. So we're doing pretty well, but I think we're all being affected by the tough economy, inflation, and so on and so forth. But since I look at every day, I was happy this morning because we had a good comp yesterday. But the last few weeks have been tough.
How would you characterize just the state of retail from a discounting perspective? I've walked into some of these big box retail stores the past 2 weeks. It's taken me back to the Great Recession period.
Well, you're absolutely right. It's not just discount stores. I have never, but maybe I don't remember, seen as much discounting with as much merchandise with high percents off. And it tells me one thing. People are a lot more optimistic about planning this season. The first and second quarters. So are we, by the way. And it's not happening. Inflation stares every consumer in the face probably daily. Food, gasoline, clothing, deliveries, you name it. So, and you see, look, I was kind of shocked to see Apple AirPods on sale. And I think I stocked up on them because there's nothing more than that I lose or misplace, so on and so forth. So I think it's going to continue, but I don't have a crystal ball, just my own personal opinion.
Mickey, it's Julie here. I'm looking at the Alex Mill website right now, kind of covetously, wanting some of the stuff. I think it's fair to say it's a fairly it's a little bit higher end in terms of price point here. And I'm curious how you see this playing out since you've seen many retail cycles across the price spectrum.
Well, it's a good question. I think, first of all, there's inflation everywhere. If you look at our kinds of competitors, I think we're fairly priced. To me, I live in $1960. Because I grew up that way. Everything was cheap. We didn't have a lot of anything. But so when I personally look at it, I think they're high. When I shop the competition, I think they're very reasonable with high quality. And my history is quality, style, value, good taste, and selecting the right styles. So yeah, we're higher than the cheap people, but we're not higher than the better people. But people are spending where they're emotionally connected to the merchandise, where they trust the people running a business, and we don't ever run sales. There's an integrity in that, and we vowed not to tell people they have to come in and get bingo, the sale is on, and then they get pissed off because they paid more money when they didn't buy it on sale. I think it's a disease for years it's been affecting the business. But everyone seems to be hit by this.
What style era would you say that we're in right now? I mean, over the past kind of 2 decades, we've seen everything evolve from kind of the preppy pink polo that Kanye West made popular all the way into kind of the retro phase and even athleisure that we found ourselves at in the peak kind of moments of the pandemic. Where would you say that we're at in this moment? And what is selling and resonating among consumers?
Well, that's a really good question. I don't know how to answer it except for what we do. It was clearly a huge overreaction during the pandemic on athleisure, athletic wear, so on and so forth. Our business, and it's what I've always tried to do with our teams, is design, develop, and merchandise apparel, clothes, accessories that frankly never go out of style. The shirt I'm wearing, it's not ours because we weren't, is 2014 it was made. It's 8 years later now. it's still a shirt I wear. Most of my shirts might be white shirts, but I buy things that I think it's classic-ish. If you have a real novelty and it's fashion and high fashion, it usually has a shorter shelf life. But, from my days at Ann Taylor onward, I like and we like goods that don't have an expiration date. Jeans, T-shirts, but with a little twist, a touch, color, and then we introduce a lot of new things that we absolutely try to make into a classic style. And that's how I think less is more in retail, less styles, less assortment, but it's clearly athleisure is not the business it was, and everyone chases on the bandwagon, as did we. And then we ended up with markdowns. We got in late. Fortunately, we didn't buy too much. But anytime I've personally in the company's been in trouble is when you're looking too much at what other people do. I'll never forget at Old Navy, we looked at H&M and it kind of hurt us for about a year, trying to figure out what fast fashion is. It's not in our DNA. So, clearly guys aren't wearing ties. They're not wearing the suits with the shoulders and the padding. We sell a ton of unstructured jackets. We don't carry one suit, men's or women's, that is structured and like the old days. Casual is what it is. And we like uniforms. Personally, I wear a uniform every day. It's much easier to dress. Women like it. They don't do it as often. But our jumpsuits are really important. Our work jackets, our T-shirts, our woven shirts. We try to zero in, and we're still over assorted. And today's a day we look at women's spring, and the big message, aside from the others, is more is too much for a customer. The stores are so over assorted that it's very hard to shop these days. And if you look at every website, who gets through more than the first 10 pages? And maybe it's 5 pages. So that's my point of view on history and where we are now. The interesting thing, for me, I've been doing it for so long, but I learn every day. Curious, yesterday, this guy showed me a sneaker from Novesta that he bought from us. It was worn out. And I came in this morning, said, why did we discontinue that? It's classic, it looks great, and it's an alternative opportunity.
Mickey, you briefly mentioned Old Navy, and I'm just going to roll with it from that point on. Look, what happens to Gap? Clearly, this is an iconic company that's now in crisis.
Well, the last time I said something about Gap, all my friends there, they were in a board meeting, and I got a slew of emails as soon as I was off.
I think that was with us, actually.
That's yes. With you, yes. Right? So I think Gap is, I can't really answer that, but I will say every business in our business needs to be run, or the biggest influencers in management are merchants and designers. Of course, you have to operating and marketing, but a lot of companies today are run by operating people, and I'm not sure they're paying attention to the product. I personally don't think so, and I'm saying with all the respect to these great companies, but I mentioned the other day, if you go to a restaurant and they have an incompetent chef, or not incompetent, but a chef who doesn't make good food, that's the product. If you look at companies, when I was on the board of Apple, Steve Jobs constantly flowed in new products. Of course, today they have a monopoly on phones, but really strong merchants, I think, have to have a point of view. They have to have vision, and they've got to connect to the merchandise. And that's a skill that I'm not sure is overemphasized in our industry.
So, Mickey, and I have to say I'm a Gap fan from way back, but I have not bought much there lately. In theory, let's say Bob Martin, who's the interim CEO, chair of the board, calls you up and says, Mickey, why don't you come on back for a little bit and steer us in the right direction at Gap. What would? Okay. This is hypothetical.
No.
But what would you do at Gap if you were going to look at fixing it?
You remind me of a joke. Well, I know Bob very well. We chat, and he's a terrifically talented guy. I think the challenge I'll tell you what I do. I'd have huge aggravation for the first couple of years. And in that company, I'd have even huger aggravation because of where they are. They're being affected, I think, by what every other big apparel chain is being affected by. Too much stores, too much merchandising, too much sale, tons of competition. And you've got to have a niche, you've got to have a point of view. So what I would do was what I did the first day, in 1983. I went through every style in the company and throwing out, keeping in, and renaming everything. Same thing at J. Crew. There is a formula that, for example, me personally, I have a formula. It's get rid of the old that doesn't work and bring in the new, and look for things that a company might be famous or well known for. At Gap, we had T-shirts, we had jeans, and Levi left. Gap was founded on jeans, but the companies I've been involved with, that's what I do: merchandise, marketing, and having a great backup team. No one ever does it alone. I couldn't have done what we did there without a strong team. And then you interview everyone, which I did at Gap. I did it at J. Crew, Banana Republic. And, I started Old Navy and Madewell, and we did the same things. It's people who get it. So that's what I do.
And that's what makes you a legend in the retail business, Mickey. So it's great to get your perspective on all of this. Mickey Drexler is Mill CEO and former CEO of Gap and J. Crew. Thank you so much for your time today. Appreciate it.
Thank you. Nice to see you.
Thanks.
Joining us to discuss the latest market volatility is Threadneedle Ventures founder Ann Berry. Ann, always a pleasure to speak with you. First, because we mentioned some of the earnings that are coming out this week, your expectations as we kind of navigate this earnings season.
Well, Brad, I think a lot of this week is going to be forward-looking. I know companies are reporting what they've just experienced in the prior quarter, but I actually think the market's looking for something very different. I think this is going to be a huge unveiling of what companies' plans are going to be to deal with recessionary expectations for the rest of this year and going into 2023. So I'm expecting lots of announcements around cost controls. I'm expecting lots of announcements around managing global revenue exposure. And I'm expecting lots of strategic announcements around looking for assets that can be sold, looking for divesting non-core activities. So those are the three themes I'm expecting to hear through this earnings season.
Yeah, and we definitely have been talking about some of the stuff that's been announced already, right? We mentioned earlier Johnson & Johnson, which is planning to spin off its consumer products business, for example. So kind of where are we in the cycle, Ann? We were talking at the top of the show about the monthly Bank of America Fund Managers Survey, which shows really bearish sentiment right now, the most bearish it has been. Does that mean we're at or near a bottom?
I don't think that we are actually near a bottom quite yet. And the reason I say that is we haven't really seen the full impact yet of what the global slowdown is going to do to the US economy. If we look at the S&P 500, Julie, we know that about 40% of revenues generated by companies on that index come from international markets, which are seeing a double whammy right now of a stronger US dollar, meaning that those overseas revenues are worth less when repatriated, and the fact that global demand is slowing down, so volume's going to be impaired. So I think until we see the full impact of that global dynamic on the domestic US businesses, we're not there yet in terms of calling the bottom, in my opinion.
And so is it not too late to get into some of the already crowded trades that we were discussing earlier, long US dollar, long oil, commodities, long ESG assets, as had come out within the B of A survey?
I'm staying out of those at the moment, just again, I just don't have conviction that we've seen the bottom on those. But what I am trying to do is shore up positions in businesses like J&J. I know you spent time talking about it. Companies like Walmart, it's one I'm a fan of, where I do think we're seeing cracks in valuation that are disproportionate relative to the stability of those businesses and relative to their ability to navigate a recession and come out stronger on the other side.
So again, when we talk about this cycle and we talk about liquidity right now, and we've been talking with folks in capital markets who have been saying it's not dead. You know, we've seen not a lot of IPOs, not a lot of SPAC deals, certainly, but maybe we could see more sort of take private transactions. What's your view on that?
Well, there is definitely liquidity in the private market, Julian. You're seeing that, yes, with the announcement of the potential take private of NCR by Veritas, which is a big private equity fund here in the US. We've seen the Zendesk activity. We do know that there is a huge war chest of just under $1 trillion that's sitting out there in the private markets, and about another $1 trillion apparently that's going to be raised by about 2,000 funds in the coming 12 to 18 months. So it's there, and what is also sitting out there is a lot of capital in the private credit market, meaning that you have got funds willing to extend loans to leverage buyout leaders, to companies with good free cash flow at, yes, higher interest rates than we've seen in the past. But the money is there for businesses that can support capital structures and interest levels that are required to get these deals done. So I think the bigger issue right now is that M&A is not happening at the velocity it could happen at, not because the capital's not there, but because there's uncertainty around whether valuations have troughed so that buyers don't get FOMO or they don't get buyer's remorse, and in the public domain so that boards can have the confidence to accept bids for their businesses without feeling they risk looking foolish because they sold too early.
What does a wave of acquisitions or take private offers mean for the employment situation? You typically see companies either pre-acquisition trim their costs tremendously, or even post-acquisition go through a massive restructuring based on who the acquirer is.
It's a great point. I think that what we're going to see is, Brad, is those kinds of restructurings happening even with just the threat of an acquisition. So even if one isn't consummated, even if bids aren't made, companies right now, I think, are hunkering down. We've seen a lot of activist hedge fund investors. So we have seen that part of Wall Street sharpening their pencils. We saw it, for example, with Peloton. We've seen it with Kohl's. And so even the threat that there might be capital willing to come in, jostling to have change, including change of ownership, is going to force management teams to come out very proactively with plans talking about what their cost control and what their focus areas are going to be. And that's what I'm referring to when I expect to see that this earnings season as management teams try to get ahead of the acquisition threats.
And good to see you. Be well. And Barry, Threadneedle Ventures founder. Appreciate it.
Climate change is literally an existential threat to our nation and to the world. So my message today is this: since Congress is not acting as it should, and these guys here are, but we're not getting many Republican votes, this is an emergency, and I will look at it that way. I said last week, and I'll say it again loud and clear. As president, I'll use my executive powers to combat the climate crisis in the absence of congressional action. That's why today I'm making the largest investment ever, $2.3 billion, to help communities across the country build infrastructure that's designed to withstand the full range of disasters we've been seeing up to today: extreme heat, drought, flooding, hurricanes, tornadoes.
That was President Biden just moments ago at a now closed Brayton Point power plant in Massachusetts, which is now being turned into the Commonwealth's first offshore wind power facility. Joining us now with more on this, also the latest out of Washington, we want to bring in California Congressman Khanna. Representative, it's great to see you. Thanks so much for joining us this afternoon.
Thanks for having me on.
So we just heard from President Biden laying out new climate change programs, but he did stop short of declaring a national emergency on climate, although leaving on the table that he, quote, will use emergency power if he needs to. I know climate change and climate policy is a priority of yours. What's your reaction to what we just heard from the president?
He needs to declare a climate emergency. I mean, I'm glad that he's highlighting what he's doing, but we need to do more. The declaration of a climate emergency will give him the authority to put more funds into solar, wind, renewables. It will give him the authority to stop the permitting for projects that are going to emit tremendous amounts of CO2. So he needs to make that declaration.
Is this the right time to declare a climate emergency given the all-time high in gas prices? I know they are down 30 plus days, but that is breaking the backs of Americans.
It is, because there are other things we can do to lower gas prices. Three things we could do is ban the export of oil and gas, except to our allies. We could have an oil windfall profits tax and put that money back in the pockets of working class folks. And I've suggested months ago that the federal government should be buying at the dip and then selling back at a subsidized price. If the president took those actions, we could lower the price of gas. Separately, he needs to take a bold climate action. And a lot of that is just funding solar and wind, which he'll be able to do if he has the climate emergency. Remember, Trump declared the emergency on the border. I certainly think climate is an emergency.
And what would you say to the argument that, say, funding should go towards drilling more as people need more oil, they need more gasoline right now, versus, say, investing in climate, which perhaps people think that they might not see the benefits of right away?
Well, the drilling takes years, so that's not going to do anything to bring down prices right away. And if you really want to bring down price right away, I think doing the things I suggested, stop exporting it. By the way, if we're drilling and just exporting it, it's not going to help the U.S. price either. So stop the exports and have the federal government put more out through the Strategic Petroleum Reserve. They could buy more into it at the dip and put more of that out. That would bring down the price.
And Representative, I know gas prices is a huge part here when we're talking about inflation, but I want to bring up a New York Times op-ed that you wrote in early June. And in that, one of the first lines you wrote was that I support the president's efforts, but we need a bolder vision and faster action. You just laid out a few things that can be done to lower gas prices. But more broadly speaking, has the president gotten more aggressive from your view? And what do you and some of your constituents want to hear from the president in order to lower inflation?
Well, he has gotten more aggressive, but we could do more. For example, the baby formula that he has importing into the country. I mean, that has only been about 1 week of baby formula supply. There's still a shortage. Why can't we just say if it's safe for babies in Europe, it's safe for babies here? Why can't we have the federal government actually purchasing that baby formula to bring it here? Why not fund the manufacturing of it other than in the plant that has had all the problems? On food, we could be purchasing the food and supplying it or putting it, selling it back to Americans at a cheap price. I just think we have to be out of the box, bolder, and recognize that right now the central thing on people's minds is food prices, gas prices, shortages of things like baby formula. On airlines, we can be doing more. I mean, the fact that airlines are canceling and that we haven't taken any steps to penalize them is wrong.
What should we do to penalize them? There have been some theories floated out there, including the likes of Bernie Sanders, that suggest fines, Congressman, and I'm sure you've seen them, that would quite frankly hamper, if not bankrupt, some of our airlines.
Well, I'm not going to suggest a number, but we should do what President Obama did. I mean, President Obama said very clearly that if there were certain things that were not met, then there would be consequences, and penalties and fines were part of that. But you can have the fines and penalties at a level that isn't going to bankrupt them. But right now, you've got a Department of Transportation that hasn't done anything. And flights are being canceled. I'm actually talking to constituents who are having to stay 7-8 hours at the airport. And it's not good enough to just tell them, OK, here's how you get a refund for that. What we need to do is make it clear to the airlines that that's unacceptable. Again, this never happened under President Obama's 8 years. He had a more aggressive Department of Transportation that did have consequences.
And I want to shift gears now and talk about the CHIPS Act, obviously clearly in focus, and we saw that became more in focus during the pandemic as supply chains were disrupted. Talk about what's at stake here if this doesn't get passed, and not just for U.S. manufacturing, but also the jobs that could potentially be attached to them.
This is one of the biggest investments in the new industrialization of America. I mean, there are $20 billion that is going to be invested in Columbus, Ohio, 7,000 jobs, and many more to come. Jobs not just for software engineers, jobs for pipe fitters, for construction workers, for manufacturing workers, many that don't require a college degree. I want semiconductors made in the United States, not in Taiwan, not in South Korea, not in China. And this is what will allow that to happen. And it's going to put an investment in the new technologies of the future. I'm confident it'll pass the Senate. And I helped co-lead the innovation bill with Senator Schumer and working to make sure we have the votes in the House.
Speaking of the future, Congressman, you've been on record as saying you think Ron DeSantis would easily be defeated by President Trump in a 2024 primary. Why? And given the recent two polls have shown margin of error difference between those two in both New Hampshire and in Michigan, and you've said that you support Joe Biden for a 2024 run, why him? With a 33% approval rating, he'll be 82 over two people from your state, your current governor, who looks like he may want to run, and the vice president, who also appears to be considering a run.
Well, the incumbent president beat Donald Trump. He's our safest bet. And compared to the other two, he'd be much more compelling in Pennsylvania, Michigan, or Wisconsin, or the Midwest. In terms of Trump versus DeSantis, I mean, you look at the national polls, and Trump is still 2-1, but the biggest thing is he's winning overwhelmingly in the Republican primary with voters who don't have a college degree. And a lot of the working class base that got Trump the nomination is still, unfortunately, loyal to him. So I think it would be a mistake to underestimate him. And President Biden defeated him. And so, he's entitled as the incumbent president to the support of his party.
Congressman Khanna, been a great pleasure having you. Please come back. We want to talk endless frontier tech jobs moving across the country, but it's great to have you, sir. Thank you.
Thank you. Appreciate it.
As concerns around staffer pay rise in Washington, D.C., 8 House lawmakers have filed petitions to unionize, becoming the first to make that move on Capitol Hill. This marks the next step in an ongoing fight for better worker conditions for House lawmaker staffers. Joining us now to discuss is Representative Andy Levin of Michigan. Congressman, thank you so much for being here. And before we get to that, we just got the news that President Biden has tested positive for COVID-19. I know you yourself had a case of COVID-19 back in the spring. I don't know what I mean, it seems like, it's going around. Almost everyone is getting it at this point. But I just wonder if you would have any reaction to it.
Super upsetting. This new variant seems to be more troublesome than Omicron. And so I'm just all thinking about President Biden and wishing him the best and hoping he has a really, easy time of it, not too bad a case, and a quick recovery.
And the White House does say it is a mild case thus far, and he has mild symptoms. So that is good news. So let's move on to the topic at hand, which is unionization of congressional staffers. I got to say, I was shocked at some of the salary numbers that I was seeing for what staffers have been making here. So what kind of traction are you getting with this push for unionization, and what is it going to do for the pay of these workers?
Well, I mean, the first thing I have to say, Julie, is it's their push. It's not my push or my colleagues' push. At the top, you said that 8 of us filed for representation petitions. We're the employer. It was the workers in our offices who filed with the Office of Congressional Workplace Rights to form unions in 8 congressional offices. One of them happens to be mine. And I'm proud of my staff for doing that. I think this could have a major, major impact for working conditions on Capitol Hill. Many independent analysts have said this is the most important thing that's happened for working conditions on the Hill in 30 years. And so what we have is there's an overall budget that the members have called the Members' Representational Allowance. We can't, obviously, our staff can't negotiate to make that bigger. That's passed each year by Congress. But within that, there's a lot of flexibility. And they, in chat groups and Instagram accounts, congressional staffers have been talking not just about low pay, but about difficult working conditions, racial issues. And so I think it's a great thing for them to have their own organization to fight for better conditions. And I can tell you, I've already started bargaining informally with my staff, and I've set a floor of $55,000 in salary for my district office and my DC office because of these discussions and because that members' representation allowance was increased by 21% earlier this year. So we had some room to improve things.
That starts to get to my question of how this would improve compensation and the overall package for your staffers and the broader base that would be looking to unionize, especially considering Washington, D.C. is consistently one of the top 5 expensive cities, most expensive cities in the U.S. to live in. For the staffers, I imagine that's a lot to bear, a heavy burden on a lower salary, especially considering the living expenses in a city as Washington, D.C. is.
Well, you're so right. And, you know, who do we want to have the Congress staffed by Americans and all their diversity? Or do we basically just want to have wealthy people be able to work there, the children of wealthy families, because, you know, their families can support them in some other way? We need to pay people enough to live on in Washington, D.C. and in our districts. And they need to have good working conditions and dignity on the job in a way to raise issues. And when you have a union, you have procedures, you have a real contract, then you have a way to do that. So I think your point is really well taken. It's very expensive to live in DC, and hopefully this will help raise the wages for workers in our offices and on our committees. And let me just point out that unionization in the American economy more broadly helps all workers, not just the workers who unionize. And I think that will be the case here. So in the United States, in the private sector, our peak of unionization back after World War II in the late 40s and early 50s was about 35%. And yet that created the whole middle class in that country. That created the whole idea of health insurance and pensions and so forth that many non-union workers also got. So these brave workers in these first 8 offices are really blazing a trail that will hopefully help all workers, Republican offices, Democratic offices, leadership offices, all of them.
Representative, curious to get your assessment on how big companies like Starbucks and Amazon are handling pushes by their workforce to unionize.
Yeah, they're handling it very badly, and they're allowed to handle it badly by our very weak labor laws. They are having mandatory meetings. They are spending where they spout anti-union propaganda, and they try to talk their workers out of forming unions, pressure them. They are having one-on-one sessions where workers have to talk to the person who sets their wages and hours. That's very uncomfortable. Amazon was caught having this tent where they were encouraging people to vote in their parking lot in Bessemer. Starbucks is dragging out this process of their workers being able to get first contracts when over 100 places have already unionized. So we really need to pass the PRO Act, the Protecting the Right to Organize Act, to let workers in the private sector just form a union if they darn well please. If they don't want to, fine. But the employer shouldn't have such a huge thumb on the scale. And you're seeing the upswelling of organizing activity. It's not like nothing I've seen in my whole adult lifetime. I started helping nursing home workers organize with SEIU in 1983. So that's a long time ago. And this activity at Amazon and Starbucks and REI and Trader Joe's and in digital media companies, it's really amazing. And we have to, by the way, we have to give the National Labor Relations Board a bigger budget because cases of new elections have risen 60% in the last year. So meanwhile, they have fewer staff than they had in 2010. So it's really important that we give the NLRB the resources it needs to do its job. And it's really amazing to see the activity at these kind of companies you're mentioning.
Well, Congressman, I wonder if that is going to be possible with this Congress, to give the NLRB more resources and or to pass the labor legislation that you were just talking about. So barring that, it seems like the onus is indeed going to be on the unions and on the workers to try to push this stuff through.
Well, I'll tell you, Julie, that's the history of this country, though. The truth is that only one time in the last century have we passed really fundamental labor law reform. really anything that made it easier for workers to organize, form unions, and bargain collectively. And that was way back in 1935, the National Labor Relations Act. The reason I mention this is that law only passed because workers were in motion. They were starting to organize at the companies that were emerging and in what we call the Taylorist economy, the big manufacturing facilities that marked that era. And so they organized, that pressed Congress to pass the National Labor Relations Act. And then boom, you had the biggest wave of worker organizing in the history of our country. And we went to a situation where we are like now, where today just 6% of private workers are in unions. Quickly after 1935 and the National Labor Relations Act, we went to 35% and we built the middle class of this country. Or we should really say, the workers of this country built their own middle class. And we need that to happen again, obviously.
Congressman Andy Levin of Michigan, good to see you this morning. We'll talk to you soon.
Welcome back to Yahoo Finance. The CDC this week recommended a newly authorized vaccine from Novavax to be used for an adult COVID-19 vaccine. Yahoo Finance's Anjali Kemlani is here alongside Novavax CEO Stanley Erck to discuss. Anjali?
Thank you, Brian. Stan, good to have you back. You've reached the finish line. Let's talk about the next steps. I know you've got doses getting into those government distribution centers this week and then going out to the general public. But what else is left on the table for Novavax to get done?
Well, a lot. So we will. So it's been a big week, obviously, with EUA, with FDA approval of our doses that we've shipped to the United States. It's getting distributed tomorrow to the government distribution system. It'll be available to the public by sometime during the week next week, and then we go from there. But what we're also working on is what our approval for was for people who hadn't been vaccinated before and adults over 18. The next approval we think will come in hopefully in the next week or two. We'll expand the label, as they call it, down to 18 adolescents from 12 to 18 years old, and then subsequently expand that for boosters so that you can boost. You'll be recommended to boost any vaccine with our vaccine.
How quickly do you expect that timeline for the boosters? Because I know a lot of people are waiting on that right now.
I know. I read about it in my email basket every day.
All right. So
So the timeline is the FDA has data now that shows that how our booster works, and it works well. They may require additional data. We're filing with new data over the coming weeks, and I would expect we have an opportunity that the FDA could take the approach that for instance, Europe and Australia and Japan have done, which is to recommend it for boosting right away. They might wait for more data, and if so, it'll be more toward the end of the summer.
Sounds good. So hopefully in time for that fall booster campaign that the FDA is looking at. Let's talk about the manufacturing part, because I know that's the thing that really slowed you down in the beginning. And now that you've reached this point, what do you anticipate moving forward in terms of where these vaccines will continue to be manufactured and what the future expansion looks like?
Well, that's obviously it's an issue that we've gotten through. We had to go through the first inspection by the FDA of our manufacturing facility. They did that in May. They had a very extensive inspection that came out. We came out really in flying colors, and that's why we've now moved to this point where we've got approval. We've got approval of the manufactured product in the United States. So that is now we just get into a routine cadence at the plant in India, and we have our own plant in the Czech Republic, which has lots of capacity, and a third manufacturing center in Korea. So we have global manufacturing capacity. They're all cranking out product right now, and we'll be making not only the current vaccine, but we'll be looking to make the Omicron vaccine if it's necessary.
What has that been, that journey for you, looking back now, that relationship that was crafted with manufacturers in the U.S.? Do you think that those will play a role moving forward at all, or are you pretty content with leaving the manufacturing overseas?
I think we have excellent manufacturing capacity overseas, and I don't think it matters where we make it at this point. We'll keep our eyes open for expanding manufacturing in North America, but that's a longer term decision to be making.
Now, looking at where the doses are, I know that the U.S. purchased 3.2 million doses, and those are all being released now for this first bunch. Moving forward, though, do you have any other conversations ongoing, especially for within the U.S. or within governments? I know previously you had a contract with the DoD and elsewhere. Do you see room for that right now, especially in conversations about the boosters?
Well, I do. I have high hopes for the U.S. Distribution of our product. The first 3.2 million doses went to both the CDC and the DoD, so we were fulfilling both of those obligations. And our expectation, our hope, is that the demand for this will encourage the CDC and the U.S. government to continue to buy more batches. And we're talking to them about the next batch right now. And that's before we get to the fall season, and I think there's going to be a fairly large demand in the fall as BA.5 Omicron variant continues to spike, and we go into what may be the respiratory vaccine season starting in September and October.
Certainly seems like it. I know you're working on that combo as well. But let's talk about the pricing and the competition. You are definitely in a competitive space now. Are you pricing that way as well? I know we haven't got much insight into the doses pricing right now.
No, but that's because it's the pricing is not transparent because it's part of a very large $1 billion plus contract, which covers the manufacture of some of these doses. As we get into subsequent doses, we will form a pricing strategy with the U.S. government at first, and hopefully, as it turns into a standard commercial product, we'll develop pricing there. I don't think we haven't published, we haven't decided and haven't published what the pricing will be, but my guess is it will be in the range of what other vaccines are charging, which has recently been in the $30 range.
And last question here, give us a quick update on globally the demand that you're seeing, because I know you've managed to get authorization in a number of countries as well as within that adolescent age group. So as it stands right now, do we see demand tapering off a little bit compared to early on?
No, I think that it takes time to get in the distribution system, and so we only started real distribution at the end of the first quarter. So in the second quarter, we've got vaccine going into arms in Korea and Australia, in the European Union, in Canada, and I think it's going along fine. We've got over 5 million doses in arms right now, including in Indonesia, and we expect to see that continue to rise, particularly as we get closer to the fall.
Absolutely. Well, Stan, thank you so much. Novavax CEO, thanks for joining us again. Back to you, Brian.
Train operators and the workers that keep them going remain at odds in labor negotiations, all of that as freight demand remains high. The latest deadline of Monday passed without a resolution that raises concerns over a possible strike. Here's what Lance Fritz, the CEO of Union Pacific Railroad, one of the major railroad companies, had to say yesterday about current negotiations. Take a listen.
I wish we could have gotten an agreement earlier in the process, but the railroads and the union leadership are pretty far apart right now in terms of what we think is an appropriate settlement on wages. So what's going to happen now is the Presidential Emergency Board is going to hear both sides, and then they're going to propose what they think is a reasonable agreement. Then we'll have 30 days to negotiate off that and reach agreement. I'm hopeful we will do that. If not, a strike or a lockout could occur.
Well, joining us with more on this on the union side of things, Greg Regan, AFL-CIO of Transportation Trades Department President, joins us live now. Appreciate you taking the time this morning. You heard what Union Pacific CEO said in that clip that we just played, that it seems like there's still a lot of friction on both sides. Where do you feel the union stands on those negotiations as the president starts to get involved?
Well, I think what Lance said is right. The sides are pretty far apart. And I think, in large part, it's because the railroads are not coming to the table with a reasonable proposal. We are looking at a situation, reality right now, where the railroads have made over $140 billion in pure profit since 2015. And during that same time, they've laid off over 45,000 employees. So when you look at what they're expecting out of the current workforce and what the pure profits they're making, we need to make sure that these workers are being paid what they're worth and what they're worth and what they're delivering for the economy and for these companies.
Well, Greg, I mean, on that point, Lance says that it is the wage bit of these negotiations that's kind of creating that chasm there. It can't just be a number, though, that you're trying to land on, right? What are other things that the union is flagging in terms of things they'd like to see the railroad companies address?
Well, certainly healthcare benefits are another major component of this negotiation. At its core, what the Presidential Emergency Board that Lance mentioned, what they're going to address are wages and benefits. There are obviously other issues that we care about here. There are work rules, there are attendance policies and things like that that need to be worked out. But right now, we're focused on wages and benefits, the core economic issues in any collective bargaining agreement.
What are you willing to move on? I mean, these are negotiations, right? Obviously, it sounds like you don't think that the railroad side has really come to the table, but where's the compromise? Where is the union willing to move on?
Well, certainly, I think if you look at the opening proposals that both sides came with, I think the unions have moved quite a bit, actually. The railroads have not. So I'm looking forward to seeing what the Presidential Emergency Board comes up with and what they recommend as a reasonable agreement and a resolution to this, because quite frankly, I think the facts are on our side here. Just if you look at the underlying economics, what they're offering, what they have offered would be a net pay cut for our employees, for their employees, for our members. That is simply not acceptable when you look at the profits they're bringing in, the rate of inflation we have right now. These people are being asked to suffer while the corporate side are making money hand over fist and doing stock buybacks and all that stuff. Their employees are the ones delivering these profits. They deserve to have a fair and equitable share in this.
These drawn-out negotiations certainly have shine a light on all the supplies that move using the country's rail system. What kind of disruptions are we talking about if this drags on?
Well, I think certainly we do have a spotlight. I think people are starting to understand that goods don't just show up on their store shelves. They don't just show up at their doorstep. People are moving all of this. And our supply chain is vital, especially when we saw during the pandemic, vital to making sure that our economy continued to move during that difficult time. These are truly essential workers. So, and what we're seeing right now, the way the railroads are operating, just from on their skeletal system, their skeletal staffing system, they've been mothballing equipment. They're not functioning in a very good way right now. The agricultural community, the energy community, the chemical companies, they've all come and publicly said that the railroads are not performing up to the standards they need. And so if we actually want to fix our supply chain issues and start building a more resilient and sustainable supply chain, it starts by giving these people a contract that they deserve. Then we can start hiring up. Then we can start expanding services and meeting what our economy demands, quite frankly. So, I wouldn't focus on what the upcoming disruptions are. I think it's more important to focus on what the current disruptions are and the fact that the railroads are not meeting the needs of the port system, of the shippers, of the agricultural community. And that needs to change, and we need to do it by supporting the workers.
Greg, my understanding is that the president, having stepped into this, extended the period by which you have that cooling off where you wouldn't strike. Now, 60 days from now, though, would you then go on strike to make that point clear to the companies here? Because that could further exacerbate the disruptions, but it could also give you a little bit more, I guess, leverage in those discussions.
Well, I'm hopeful that we do have a good recommendation. It's something that can be the basis of a negotiated and ratified agreement on all sides. That's the goal that the unions have had from the beginning here. It's not about trying to prove a point or have a work stoppage for the sake of a work stoppage. What we want right now is to make sure we get a good agreement, and hopefully that the PEB, the recommendation, will be the basis to achieve that. We're gonna work closely. We're gonna be diligent and disciplined to make sure that we can deliver for our members.
Well, I guess the important thing, too, is also to remind our viewers that this is a negotiation that's been going on for 2.5 or 3 years now. So that further kind of kicks the can down the road. Could you see Congress getting involved now that the presidential order does give them the power to intervene in these negotiations if they have to?
That is certainly a possibility. And we are, we would not want to be in that situation. Nobody wants Congress to have to resolve a contract dispute. But we're doing our best to inform people, to make sure they understand what's at stake in this negotiation, what their role could be down the road. Certainly from our perspective, you made a really good point. it's been 3 years since we started this negotiation, which, by the way, was during the teeth of the pandemic. And these workers have not received a raise, not a single penny of a raise in that 3-year period. And so, right now, I think there is a basic fairness issue at stake here.
AFL-CIO Transportation Trades Department President Greg Reagan, it's good to talk to you today. Appreciate the time.